Hey, everybody, this is Talking Money. Of course, I'm your host, John Savarino. I have a very special guest here with us today. His name is Jackson Sheputis. He is Rooted Wealth Advisors portfolio strategist advisor. He is the man behind the scenes. He does a lot of our portfolio models, analysis, pre planning. He is my go to for everything Excel, finance wizard from Valparaiso. Jackson, how are we doing this morning?
Doing great, John. Thank you for having me on Talking Money. I've been watching your last few episodes. I'm excited to get to make an appearance.
Yeah, man, I really appreciate you taking the time out of your busy schedule in light of everything that's going on today, economically, in the stock market, internationally. So I really appreciate you taking the time. I just wanted to do something a little bit different with this episode. I think a lot of folks are a little uneasy on things today, so I wanted to bring you in, and quite frankly, I just want to know, like, what are your thoughts in terms of today with where the stock market sits? What are some things that folks should be thinking about over the next 3 to 6 months? And if you have any long-term thoughts on the stock market and the economy, we'd love to hear them. And before you answer those questions, full disclosure to all of our watchers, this is in no way, shape, or form direct advice, feedback, investment advice, nothing of that nature. These are very general, high-level thoughts. Before making any type of changes with your personal finances or portfolio, seek out a professional's advice, or of course, call us at 815-918-4727. So I'm going to kick it to you, Jackson, and let us know your thoughts. We're curious.
Definitely. There's a lot of different directions we could take this because there's a lot of things happening right now in the world that are affecting people's financial plans, and the things that we thought we knew just a few months ago have changed quite a bit. But the biggest thing that I've seen over the past few months and even over the past few days that's affected the stock market and people's portfolios really is the combination of inflation and then the Fed's response to that, which we saw just this week was an announcement by Jerome Powell that they're going to be raising interest rates by 50 basis points. We saw that just this week, and it's expected that we're possibly going to see more of those announcements throughout the year to continue to raise interest rates to try to cool down this inflation that everyone knows we've been seeing over the past 6 months or so. And so what that's going to do is it's really going to have a big effect on the stock market because it affects certain companies differently than others, right? Some companies really rely on debt to finance their operations, right? And those companies are going to be the ones that are most affected by this because they're going to need to keep borrowing money at higher and higher interest rates. Whereas companies that are already more established and profitable and don't rely on as much debt, those are the ones that are going to be able to stay functional and stay profitable throughout this change. So that's something that we've been looking at within our portfolios is really which companies are best suited for this near future, because this isn't something that's going away. All the analysts that have released their expectations have been noting that we're probably going to see several interest rate hikes throughout the year. And it's already started to affect the markets when you look at those companies that are really growth oriented and relying on a lot of debt. A lot of those companies are in the technology sector, and that's really been one of the hardest hit so far earlier this year because people are understanding that these market conditions, it's going to be harder to borrow money to keep those operations functioning as they are. Whereas some of your more established, profitable companies, and one of those biggest sectors is oil, they're actually benefiting from inflation and these rising interest rates because one, their profit margins have gone up, and two, they don't rely as much on borrowing money. So that's one thing that we're looking at with our portfolios and kind of structuring things. And that's something that's really worth taking a look at your own portfolio to make sure that you're in the right investments, because what was right a year ago is not necessarily right today.
Amen. Amen. I think that's really great feedback. And what you had mentioned before too is those that are leveraging a lot of debt with rising interest rates, could be, and may be affected, a lot more significantly than what we've even seen over the last few months. And, of course, with interest rates rising, The traditional 60% equity, 40% bond portfolio is kind of a double whammy that we haven't seen in over 3 decades. So, navigating this type of market is very, very tricky. And, we at Rooted with Wealth Advisors would love to help anyone that maybe is seeking a second opinion or just seeking some type of professional's advice. Once again, navigating through a very unprecedented time, not only in our economy, but the stock market and the bond market as well. That's all the time that we have today to kind of cover. Would love to segue this into another video or another series here in the near future, Jackson. Appreciate your thoughts on things today, and once again taking the time out and doing this for all of our viewers.
Absolutely. Thanks for having me, John. And I would say to our viewers, if you have any questions, just feel free to give us a call.
Amen. Like, share, comment, subscribe. You guys know the drill. And as always, we'll talk money soon.